Hey, what's going on, everybody? In today's video, we're going to be covering earnings season. It's ramping up right now with tech companies reporting this week. We'll be looking at some important economic data like GDP and PCE. Why this week's price or last week's price action was bullish, and what's coming next. We'll look at last week's setups and see if we made any money or not, and we'll look at some new setups this week that include Las Vegas Sands, Pinterest, and MRVL. By the way, make sure you smash that like button. We put a lot of work into these, and it really helps when you hit that like button. So go ahead and smash that right now. Okay, if you're wondering who I am, I'm Kevin D in the Discord. I've been trading for 25 years, a full-time trader, working through the second level in the Certified Market Technician program. If you're wondering why I do this, I work at the investor community. I run it, and we do these videos every single weekend to keep our members up to date and informed on what's going on in the markets and highlight fresh opportunities. It's a really cool community of like-minded traders, and so if you want to check it out, in the link below down in the description. So here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading investment decisions are your own and done at your own risk. All right, let's do this. But first, I want to wish all my Asian friends a happy Lunar New Year. Also, to anybody else who thinks New Year is so awesome that it should be celebrated twice. So let's hope the year of the rabbit is better for the markets than the year of the tiger was. All right, so let's take a look at earnings. This is what we've got coming up this week. I want to start on Monday. After the close, we've got Logitech. I think this one's fairly important. It's going to tell us a little bit, it's a little hint of what might come in the computer hardware industry. Before the open on Tuesday, we've got quite a few important ones. In fact, all of I could have highlighted this whole list, I think. But Verizon, obviously, Johnson & Johnson, Lockheed Martin, Halliburton. A number of these are kind of the value stocks that have been suffering a little bit. We'll get into that a little bit today as well, and what's going on there. But these are some big names that we probably want to watch out for, and some of these down here as well. GE, of course, Raytheon, 3M, lots of big names here. Microsoft after the close on Tuesday, that's probably one of the biggest, or certainly among the top 5 this week, maybe even in the top 3. Microsoft, really important. Some other big names that you're very familiar with, I'm sure, also after the close on Tuesday. On Wednesday before the open, we have Boeing. Abbott Labs is another that I'm going to be watching closely on Wednesday. I was gonna show off a little setup in Abbott Labs until I realized that they have earnings on Wednesday before the open, but might be worth a look. If you go take a look at the chart of that, I'm sure you'll know what I'm looking at, but it's not something I want to play until after earnings. Okay, on Wednesday after the close, here's the big one. Tesla, that's got to be at the top of the list for earnings this week. That's really important. Another one that I'm going to be watching closely, and you might be as well after you see a couple of setups I'm going to show you later on, is Sands, the Las Vegas Sands Corporation. We need to be aware that this is coming, and you'll see why a little later in the video. Okay, American Airlines on Thursday before the open, and MasterCard as well on Thursday before the open. And then after the close on Thursday, to kind of go along with MasterCard, we have Visa, and then we also have Intel. Intel, another really important one. to give us an idea what's coming for the future for the semiconductor industry, and also important because of another setup we're looking at a little later in the video. And then on Friday, before the open, we've got Chevron. American Express probably important as well, but after MasterCard and Visa, I think that the market's going to have a pretty good idea what's coming from American Express, so they probably won't see a lot of movement there. So that's our earnings for the week. Let's take a look at our macroeconomic events. On Monday, there's pretty much nothing going on. So that's cool. On Tuesday, we've got some, this is an important one, the flash services and manufacturing PMIs. PMIs standing, of course, for Purchasing Managers Index. These numbers can and probably will move markets. On Wednesday, not much going on in the U.S. However, we have the Bank of Canada policy and rate statement. So Bank of Canada will be setting the overnight rate. And by the way, the Bank of Canada is like the Fed in the U.S. You're thinking, it's Canada, who cares? Well, you know what? This can move U.S. markets. A couple of rate announcements ago, when Canada went from I believe it was 75 basis points down to 50 basis points. That moved markets a lot. It was a bit of a surprise. And lo and behold, the very next Fed meeting, they went down to 50 basis points. So this is important. This is definitely worth watching. By the way, and we are expecting 25 basis points out of the Bank of Canada. Okay, on Thursday, we have advanced GDP for the fourth quarter of last year. So this is the first GDP print for the fourth quarter. In case you don't know, they release three different reports. They tend to get, so this is the early one. The advanced one's really early, may not be entirely accurate. And as these reports move, go along, they do get more accurate. So it's important, though. Even though it's kind of like, it's sort of, the first one's a bit of a guess, I guess you could say. It is still important. Also on Thursday, another really important number, the durable goods orders. This will definitely, or can definitely, move markets. And as always on Thursdays, we have unemployment claims. Now on Friday, we have PCE. This is the Fed's favorite inflation measure. So PCE stands for Personal Consumption Expenditures. It's how much is the consumer spending? So if the consumer is spending a lot more money, having to spend a lot more money on things, well, then that is inflationary. So this is something the Fed watches closely. Therefore, we should watch it closely as well. So that is Friday in the pre-market, an hour before the open. And also on Friday, more numbers that can move markets. The U of M consumer sentiment and consumer inflation expectations. Both really interesting numbers, both numbers that can move markets. So that's a fair bit of macro econ going on this week. All, fairly important stuff. So we'll want to be watching out for that. All right, so we're going to move on. We're going to be taking a look at a whole bunch of charts. We've got a lot to look at today. We're going to be looking at the major indices. We're going to be looking at some international markets. We're going to be looking at important commodities, of course. We'll be looking at all of the major sectors. We'll look at last week's plays, and we'll look at some new setups. Oops, we'll move on to that later. Okay, so let's start with the SPY. So here we have a chart of the SPY. You can see on this chart we're going right back to the beginning of 2022 when the downtrend started. We are still in the downtrend. So we have a long-term downtrend and we have an intermediate-term uptrend. All right, so where are we at right now? Okay, so we had this base, after making a nice move up, hitting the the downtrend line a couple of times, trying to break through the 200-day moving average. We pulled back hard. I'm sure you all remember that back in December. And then we built a really nice base. And we had a really nice breakout from that base. We got up through the 200-day moving average, and before even touching the downtrend line, they sold. And they sold really hard, and that they sold on Wednesday of last week. That was the day we had some PMIs and what's the PMIs? Or sorry, PPIs, Producer Price Index, and retail sales numbers, both of which showed that inflation should be coming down quickly. Now, you would think, all right, great, inflation coming down quickly. The market should love that. But I think that what happened was that the numbers were, from an economic standpoint, from looking at how the economy is doing, from looking at how how we might be moving possibly into a recession, how deep a recession might be. These numbers were quite recessionary. And I think it was really interesting to see this shift in the market from fearing inflation to fearing recession. I think we really saw that clearly last Wednesday. And that's something we've got to watch out for going forward with all this economic data we've got coming up next week. Moving forward, and in the week after next, we have the Fed. So it'll be interesting to see how they respond to this change of sort of outlook or sentiment that the market seems to have regarding inflation and recession. It's kind of saying, hey, the market's saying, all right, we know you've got inflation under control now. We know inflation's coming down. But are you hitting too hard? Are we going to have a recession? So then when we see numbers that are quite weak, the market's not going to react favorably to that, I think. So that's what happened on Wednesday. We had this big red candle, and then we gapped down on Thursday and had this tiny little doji. I'm just going to actually hide that line so we can take, there we go. We can see that little doji a lot better now, right? We'll zoom in even a little more. So this pattern here, if this were in a down at the bottom of a downtrend, this would be what they call a Morningstar reversal. It's actually quite a bullish pattern if you see this at the bottom of the downtrend. And I think in this context, even though it's not I guess it's part of a long-term downtrend, but in the in the more recent past, right? I mean, it's really, we saw this come at the top of a short uptrend. I still think this is bullish in this context. Especially here, we have this very indecisive little tight day after a big downtrend day or a big red day and a gap down. I think this candle right here was quite bullish, and then obviously Friday's candle with a gap up and go and close right at the highs. Very bullish candle there. So I think that with no economic data coming on Monday, I think that we probably see unless there's some macro over the weekend that I haven't seen yet. We probably gap up and we probably continue higher, and I think that we've got a really good shot of at least getting to the trend line. It's going to be really interesting to see what happens if and when we get to this trend line again. I think we've got a fantastic shot at getting through this time. But we'll have to see, right? There is a bit of a battle going on between, we've got this declining 200-day moving average, and we have a rising 50-day moving average, and we are, right between that right now. And it is a bit of a battle between the bulls and the bears here, but I think the bulls are winning. I think the bulls are showing us that, they want to buy this market. And I also think it's really important, if we're going to be bullish, if we're going to break all these downtrends and get out of this bear market, we have got to come up and put in a higher high here to confirm that this is a higher low and that this is a higher low. I don't like that this is looking a little bit like a lower high, but all of that, of course, is in the very short term. So I am looking at this price action and quite bullish for the short term on this, knowing full well that we've got a lot of macroeconomic events coming this week and the week after. Being aware of that, but in the short term, yeah, I'm definitely bullish. I think we're going higher. All right, let's take a look at, I'll bring the Dow back into this. I just want to quickly look at the Dow. Dow kind of, you can see now for a little while going sideways, broke out of that base, and unlike the S&P 500, okay, you notice how we didn't even pull back we didn't quite get to the top of that base that it broke out of. This is actually, I should mention, this is quite bullish too. Another thing that's bullish here is we break out of this base, we go up, we pull back, we come back near that base and immediately turn around. Another check mark for the bulls right there. Okay, back to the Dow. Now you can see this pulled back farther and sooner as well, right? When the SPY was having a little bit of a doji day, this was actually starting to pull back and then pulled back a lot on the Wednesday. Pulled back into the base that it had broken out of. And it has turned around though, but it's really kind of setting up a lot of sideways sort of consolidation type action, unlike the other indices. Let's take a look at the Qs. The Qs, our tech index is looking quite nice. It didn't pull back, so if this is the base that it broke out of, right, it got nowhere near that base on the pullback before turning around. Same sort of doji kind of action there, which is good to see. And this move up on Friday, moved up into basically the open of Wednesday. And we are, moving back into this gap fill potential here. I like this. I like this price action. It looks good to me. I want to compare now the QQQs to the Dow. I want to show you why, or I want to show you that I think that we've been seeing some rotation out of the safety names, out of the value names, and back and into tech. All right, so this is another way. You've seen one of the ways that I do these relationship charts. This is a relationship chart as well. We're dividing the Qs by the Dow. So when this is rising, the Qs are outperforming the Dow, and when this is falling, the Dow is outperforming the Qs. And you can see that the Dow has outperformed the Qs ever since the beginning of December last year. Or sorry, the beginning of December 2021. Now, you can see over the last 2 weeks, the Qs have been strongly outperforming the Dow. And that's really interesting to see, and I think that's really important to see as well. I think this is really good for the market because it's showing us that the money is moving back into a lot of these tech stocks that had really suffered, a lot of the more speculative stuff, a lot of the risk, what was perceived as riskier stuff, and money is coming out of the Dow stocks, which is our, traditionally our value stocks, right? So this is good to see, in my opinion, if we want this bear market to end. All right, let's take a look at IWM, the Russell 2000 small caps, and you can see that these came after breaking out of the base. Came right up into that strong resistance, pulled back, but this is really cool. I like this. Oh, we want to notice here, look at the trend line that we broke through. We have broken through, on the Russell 2000, we have broken through the downtrend line. This is big stuff. This is important. And look what happened when we pulled back. So, we pulled back from resistance here. Okay. No big deal. We had come out of a nice base. We'd moved up really strongly into that resistance, broke through a downtrend line. We're allowed to pull back from that resistance. Where do we pull back to? That downtrend line. We tested the downtrend, and the 200-day moving average is right there. We've got the 50-day, the 21-day, all these moving averages right here. We bounced right off of that, and we had a strong day with big volume on that reversal. Nice. This is a thing of beauty. If you're not bullish after seeing this, I don't know what's not going to make you bullish. You've got to be bullish looking at this. So the expectation obviously is this goes higher, this attacks this moving average, or sorry, this resistance line and probably gets through. I don't know if it's going to consolidate first or not. I'd kind of like to see it consolidate. But, I mean, it might just, if this does this in a day, we kind of want to see this just blast through here, right? So that's AWM. Let's take a look at the VIX, the volatility index. We saw this move up. So this bounced. I mean, this came down unusually low here. This is sort of unexpected. Wasn't surprised to see this bounce up a little bit. Look at, this wick right here came right up to the apex of that triangle and also the declining 50-day moving average and pulled back hard. We're back right around this 20 level again. Be nice to see this, now that this looks like it's rolled over, it'd be nice to see this continue to the downside. Our 10-year yield. So we had a base, we kind of went, we came out of it, we went back into it. We seem to be chopping around in that area. That's fine by me. This has declined quite a bit. If this turns into a slow grind down, that's totally cool. Let's take a look at our dollar index. That's not our dollar index. Here's our dollar index. You can see that this is drawing a bear flag here. I'm not going to draw that in. You can clearly. Oh, actually, here, let's do it this way. Try that again. Turn my little magnet off. There we go. Okay, so we have a bear flag. All right, where does that take us? Let's just grab that and move that down. That takes us into the 98.5, 99, 98.5 level. We can see that there's a a couple potential support levels surrounding that. Let's draw those in. Okay, good. Those are not necessarily major support levels, but I'll clean that up later. But yeah, if we can break out of this little bear flag, I think we can see a pretty decent move down out of here. Maybe not all the way into this, but certainly 99.50, 99 even. And that would, of course, be good for markets. All right, let's move on to our, DCA timing tool. Obviously, Obviously, everything there is still green. And notice here, because we're now looking at a weekly chart, this yellow line here is a 10-month moving average. A lot of technicians like to watch the 10-month moving average, and they will make decisions on that moving average once it closes on a monthly chart. But we are now above that 10-month moving average, which is really nice to see. And this is some really bullish pattern here on the weekly chart as well. And notice last week's little hammer candle. Let's take a look at the Qs there. Same idea. We are now coming into the 10-month moving average and looking like we're trying to get ahead of that. Again, bullish looking price action here on the weekly chart. And same with IWM. The DCA system is green on this. We're well above that 10-month moving average. A little bit of a weekly resistance here, which we saw on the daily chart as well, right? But looks like this is easy to get through. So that's our dollar cost averaging. All systems go on the dollar cost averaging system. All right, let's look at some of our global indices or ETFs. This is, I think, going to become as long as global equities are outperforming the U.S. that we talked about last week. We're going to keep looking at these because I think it's important. So one of the ETFs that a lot of technicians and market watchers use to see what's going on around the world is ACWI, ACWI. So this is a global ETF. It's got all countries, stocks from all countries of the world in it. This is the massive global outlook. And you can see that, of course, this had been in a serious downtrend. That that downtrend now appears to have been broken. I should have had that drawn on there before. You can see that over the last week or so, we broke through that downtrend. We've pulled back to it, just like I was showing you in IWM, right? Pulled back to it and bounced off of it. Fantastic. Let's get a let's get this uptrend in here. Clearly, this ETF is in an uptrend. Okay, good news there, right? Now, this ETF includes the US. There's another version of this that excludes the US, and that is ACWX. So there are, the US is not in here. Do you see the difference here? I know it's probably kind of subtle. I'll just flip back to the other one. Flip back to ACWI, okay? And now, without the US in it. Do you see the outperformance here? Let's go to our relative strength chart, and I think you'll be able to see it a lot easier here. So, bottom pane here is our relative strength. ACWX divided by ACWI. When this is going up, ACWX is outperforming ACWI. So this is global stocks, excluding the US, strongly outperforming global stocks, including the US. So this is why we're looking at these global ETFs. We've got to start looking around the world because or we're going to get left behind. All right, let's go back to our regular charts here. I want to look at EFI. This is EFA. This is Europe, Australasia, and developed countries in the Far East. This is looking quite nice, right? We looked at this last week as well. We were expecting some consolidation up around this resistance level. We've got that, and I'm expecting a break higher here. Let's look at EEM. This is the Emerging Markets ETF. Now remember, this has a lot of China in it. That is definitely skewing this to the upside. It is still outperforming. I mean, it's still, emerging markets are doing well, but China is definitely skewing this to upside a little bit. You can see how well China is doing. Now, these are FXI is large caps in China. This is definitely worth paying attention to. We had a nice consolidation in here that we talked about last week. And on Friday, we had a gap up and a go. We've broken out of that consolidation. It probably would have been hard to buy that gap, especially when it was breaking out of here as well. But we should be paying attention here. Now, my favorite global stock is still Turkey. I mentioned this last week. I mentioned I'd done really well in it, and you can see now. I don't know if any of you jumped in this and bought this. It would have been really hard to buy that gap up. That's a huge gap that it had. I think that gap was something like 8%, 10% that it had on Tuesday of last week. Really big gap up, but it went. It's still continuing to rise. Now you can see we've got all-time highs just overhead. We also have, and it's important that I point this out, we have an RSI divergence, or had an RSI divergence when we made that high there, right? Here was our, if we go back to this high right here, you can see that was our high in the RSI. We made another high here, but we failed to make a higher high in the RSI. That should have, warned us that momentum is slowing, that, we could see trouble in this. And sure enough, when we made this high, we again failed to make a higher high in the RSI and rolled over quite hard. So now, as we come back up here, RSI isn't really rising that quickly. If we make a new high in this, it would be really nice to see RSI at least break through this high back here, or at least break through this downtrend line I've put over these highs in the RSI. So, definitely reason for caution as we come into this. But if RSI can actually, show us that momentum is building again and make some new highs in the RSI, that would be great. That'd be really good to see and give us confidence moving forward that maybe we can buy a breakout here. But so far, it's, enjoy the ride if you're in it, but watch out as we get up here. All right, let's move on to our commodities, and we'll take a look at gold. Gold continues its grind higher, nice smooth grind higher. It has little consolidations along the way. That was a nice consolidation right there. A little bit of a wider consolidation. And, after maybe trying to break out, pull back a little bit. Still above some major resistance, though. Or which is now, I guess, support. Certainly acted as support on Friday. The gold miners are consolidating, moving sideways, looking like they might want to go higher. They're no longer leading gold. They are definitely lagging behind gold, which can be a warning sign. Silver. Still going sideways, hasn't broken out of this base yet. This consolidation is firmly intact. Come on, silver, let's get going here. Copper. Copper did try to break out of a little bit of a consolidation, a little bit of a bull flag. Messy though, and lots of dojis and stuff. I don't know. I'm not sure what to make of this, other than it didn't break out of here and go. It's broken out of here and is now being really indecisive. So, your guess is as good as mine where this goes next. The indecision makes me kind of think that it's going to roll over and move to the downside. But other things that are going on in commodities in the metals markets make me think it moves to the upside. So that's why I'm really unsure on this one. DBC, our general commodities ETF, was moving higher, had a little pullback, moving higher again. This is good to see. It's fine if this grinds higher. Let's take a look at oil now and our entire energy complex. There's a lot of interesting stuff going on here, I think. You don't really see it so much on the oil chart. You can see that we've come into a major resistance zone. We only had a minor pullback when we got, tried to break out the top of that zone there. We had a bit of a pullback there, and again, that was on Wednesday, right? But, the top of that channel, the top of that bear flag that we broke out the top of, is still holding as support. So, I think that we are going to grind higher in oil. Natural gas, on the other hand, is, continuing its grind lower. It's come into a major support level, though, and it tried to bounce off that on Friday. XLE, our energy ETF, that stepped up a level, came back, tested the, tested a resistance area, now support, and is moving higher again. Oil producers and exploration. That looks like it's trying to kind of break out of a base a little tentatively. Look at all these moving averages here, though. Nice price action in the last couple days, though. I think that we can see this go higher. And OIH, the oil services ETF. After breaking out higher, this had a bad day on Wednesday with everything else, right? It doesn't really matter what the fundamentals in the oil market are. When the markets are having a day like they did on Wednesday, everything's going to get sold. And that's what we see happen here. But we did see a bit of a reversal, although it is a little weak for my liking. All right, let's look at some of the companies, because I think that a lot of these companies are kind of setting up nicely here. So this is ExxonMobil. This looks like it wants to break out of this level and make some new all-time highs, right? Consolidation is getting tighter in here. I think all systems go for ExxonMobil. Oxy, this is Buffett's, or one of Buffett's oil companies. We can see we've got base on base action and A little bit of, an attempt at a breakout on Friday. I'm glad that it waited, though, and didn't really go. I think that this can go on Monday. You know how much I like this base-on-base action. MRO is another one. We talked about this quite a bit in the past and stopped talking about it because it got itself into a downtrend. It was building a nice base. You can see it fell out of the base, but only for a couple of days. And from failed moves come kind of fast moves. And back in, building the base again, and now we're near the top of the base. Looks to me like it wants to go. Let's move on to our solars. Oh, and I've got another energy name to look at towards the end of the video when we look at new setups. I'm really, really interested in this particular name. I think we could. I think it's investable, to be really honest. Although I do need to do a little more research on that front. Okay. Anyway, back to TAN. You can see that TAN came into resistance, a pretty strong resistance zone here. It unfortunately came into there on Tuesday. It tried to get through, tried to poke back up into there on Wednesday when the market was coming apart. What's interesting, though, is this waited until Thursday to really fall apart, which is kind of weird, considering the weakness in the market on Wednesday. I guess maybe because it didn't fall apart on Wednesday that everybody decided to sell it on Thursday. I don't know. It doesn't make much sense to me, but it seems to be finding some support here, though. Should actually probably draw a line here. We do see a fair bit of price action around this area. Let's just get a little line on there. You can see that, that kind of like from here, even really goes back into here a little bit, doesn't it? So yeah, this could be a fairly important support area here. If it continues up from here, could be quite interesting next time we get back up in here. Because we've hit this level so many times. If it doesn't pull back very far, it basically makes a higher high, or sorry, a higher low, and then moves back up in here. I think it's got a good chance of getting through. However, let's look at some of these individual companies, like First Solar. First Solar was breaking out to new all-time highs and started to roll over, and you can see that started rolling over before the ETF did. Again, though, had a nasty day on Thursday, but we've got a little bit of a reversal here, kind of a squat little hammer candle going on there, right on the 21-day moving average. So if you're in this or you're a First Solar bull, you definitely want to see that moving up now, without looking back here. Canadian Solar, this is one that had been doing really well, had a really nice move here. Had a little bit of a consolidation, not surprised to see that pull back. But notice it didn't pull back as much as some of the others. Didn't pull back as much as the TAN ETF. Didn't pull back as much as First Solar. And turned early. Interesting that this one turned on Thursday when the others were kind of falling apart. And, continues to make a nice little move up here. I think this will go higher, and I think this will eventually get up into this zone where I was expecting to see some more consolidation before it breaks out. ENPH, on the other hand, which has been underperforming all of these. Look at the terrible day that this had on Thursday. Indecisive little candle here, much like we saw on the SPY on Thursday, and that was its candle on Friday, but really underperformed the market, underperformed its peers, over the last few days. This support level right here, this has really got a hold. Or I think we can start looking into here, this area back in here, for where might it support. Well, the volume node for sure, so that's around 192. Maybe it finds some support at 200 first, but I'd be looking at the 192 level and then obviously the bottom of that consolidation. But it doesn't look good for ENPH here. Definitely a major underperformer now after being an outperformer for quite some time. All right, let's move on to our other sectors. Let's take a look at XLY. You can see we had that pullback that the markets had. But we had a nice candle on Friday, so we seem to be bouncing, and right off the 21-day moving average too, which is nice to see. I think we move higher in our consumer discretionaries. Industrials, definite weakness here, definite underperformance on the move down. We bounced kind of, right where we should. At the bottom of a base, but I think we're going to see a little bit of underperformance from these, right? And again, these are the stocks that had been outperforming. And so as we see this rotation into tech stocks, we're going to see it coming out of industrials. Doesn't mean that they have to go down a ton, but I'd be surprised if we do any better than go sideways in these for a little while. As long as this rotation stays intact and money is still continuing to move into technology. Financials, we had a move down, kind of broke through, I guess, our early uptrend, but trying to take it back. We'll have to adjust this trend line here, something like that. We don't want to see financials being weak. That's definitely not what we want to see. We don't have to see them being strong either. We don't have to see them leading the market. But we want to see this get back up in here. They can consolidate sideways in this range. That's fine by me. Technology, again, I've been talking about technology and rotation into it. Now, the rotation into it has been kind of selective, but if you look, you'll find it. And considering how weak technology had been when other sectors were strong, it's nice to see this move now. And you can see that one of the trend lines we had, we came down to it, got just under it, and have bounced away from it. So that's good to see. Stronger though, and where most of the tech type of rotation seems to be going is into communication sector. Okay, and look at another trend line. So I pointed out a week or two ago that we had broken through one of the downtrend lines, that we had another downtrend line overhead we had to watch. You can see where all these lines come from here. I'll back up a little bit. Okay. So these lines, the lines that we're starting to break through now are starting back farther and farther in time. So yeah, important to see this break through another one here, and also getting into a major resistance zone. Really nice price action over the last couple of days in the communications sector. All right, let's look at some of the FAANGs and tech stocks that we like to look at here. Here is Meta. You can see that we were consolidating under this resistance line, and the resistance line also happened to be the COVID low from back in 2020, and have broken through that nicely here. Would like to see a little more volume than this on the breakthrough, but it is, we've definitely got higher green volume than red volume, so that's good. We'll take it. Apple. Apple is actually pretty healthy here, I think. I'm a little bit surprised. I thought Apple was going to pull a Tesla. Yeah, I think we're seeing some good strength out of here, and we're seeing it on half decent volume. I really like the way that Apple closed on Friday well above the open from Wednesday. So that's good to see. Now, obviously, there is a lot of overhead resistance here. We've got, this 50-day moving average just overhead. We've got this line here from the low of that consolidation. We'll just drag that across. We're going to need that one. We've got a downtrend line here. That intermediate downtrend from there. Really, I guess we should be throwing another trend line here, something like that. You know what? Actually, I'm going to delete that one. There we go. So yeah, long story short, lots of resistance here, but it's looking good. I like that price action. Amazon, not quite as good. Not too bad though. And you can see here the move down in this started a day early, right? That move down started on Tuesday on this one. But getting a bounce off the 9-day moving average. So yeah, I mean, maybe this is all right. I was kind of worried when this started to roll over early that this was not going to be good for it, but I think we're hanging in. Netflix, so they had earnings, as I'm sure you know. They had earnings after the close on Thursday. I didn't think earnings were that great, but we got this giant gap up and gapped up through this resistance level, and are well into now, are moving away from this old former gap area. So that's nice to see. Definitely, our intermediate term uptrends are turning into short-term uptrends. Everything looking strong here, like, the trend, the uptrend's accelerating. We will have to watch for this gap, though. I'm going to draw that in, in case we start pulling back to this. Okay, so first of all, the top of the gap will at first act as support, but then if it gets in there, it may want to fill it. So you want to see a move away from this gap as quickly as possible. Google had a surprisingly strong day. I guess all you got to do is lay off a big chunk of your workforce, and everything's good. Market loves it. Big gap up, and moving into this old former gap that is mostly closed but not quite. And that was part of a basing pattern from way back in the fall of last year. So yeah, nice strong price action out of Google here. Microsoft pulled back a little too much in my opinion, but took it back. Let's get that gap in there though. Took it back with a gap up on Friday, and nice move up right into resistance though. So it's a little scary after when that big move up into resistance. We should probably consolidate for 2, 3, 4 days and then break out of there. But we'll see. If the market's strong on Monday, this can continue higher, or maybe go up and test this next level up. Tesla. So Tesla is coming off these lows fairly nicely. We have a nice base on base pattern here though. So if you're really bullish on Tesla and looking for a spot to get in, and a spot that should work right away, well, if you see a breakout of this base above this 135 level, that should give you some movement. However, you've got this downtrend line overhead, and next time we come up into that, because we were pretty far away from that line, next time we come up here, it may turn. It may find sellers here. So I would suggest that you be, even though we've got some bullish price action, some nice pattern here, I'm a little worried about this downtrend. So be really careful if you play this. Okay, semiconductors. These leveled up. They came back up into resistance and pulled back. Not surprising. Had a really nice move up, so no surprise at all that they pulled back. But they pulled back to a former support area here, 220, obvious level, and bounced off of there. Nice to see. So it'll be interesting to see. I really think though that because these have been so inconsistent, we've had so much trouble with these semiconductors. I think we need to see a consolidation right up in here before this is ready to go and really break out. I've looked at a number of the individual companies there, and not seeing really anything really outstanding. I do have an interesting semiconductor stock to look at, though, that'll be especially pleasing to bottom fishers. All right, healthcare. Healthcare's not looking great. In fact, I'm going to get rid of this upward channel, and I think we need to highlight this short-term downtrend, because that seems to be the dominant pattern right now in this downtrend. And you can see that we can actually change that into a channel. Let me duplicate that and drag this over here. This is really looking like it wants to move down. However, nice hammer candle here on Friday. Low volume on the hammer candle, though. Interesting, interesting volume on Thursday's candle, which is kind of a reversal off the lows after, now completely filling this gap. I'll get rid of that gap fill. It has turned, it's gone up, but kind of lower volumes. So I'm a little sketched out. I think that we probably do come up to the top of this trend line, but I think we're going to roll over again. I don't think healthcare really wants to go higher right now. That makes me a little worried for my biotech play. However, in that biotech play, it pulled back to the breakout zone, and it bounced off of there. And we've got a nice green candle on Friday with, half decent volume. I don't like how much red volume there was now compared to Friday's green volume, though. But I'm not going to be comfortable in this until we can break out above this little, the top of this little flag pattern here. But this is still, it's gotten a little messy. It's this bull flag has gotten a little wide and messy. It is still there, though. Like I said, get above this line right here. I am a much happier guy. All right, REITs. So we're getting our defensive stocks now. We don't really need to see these do much, but REITs are doing okay. The uptrend is still intact, although it can't seem to make higher highs here. This resistance level here probably needs to turn to a major resistance level after having this many 1, 2, 3 failures up there. I think that, we'll go major on that one now. If you're in REITs and want to see these go higher, we've got to get through this level. Consumer staples. Look how hard this one rolled over. And not much of a recovery on Friday either. I mean, it is a decent looking reversal candle, and it did happen right at the bottom of the channel. And, right at some former support resistance levels. So that's where you want to see this bounce happen. But it doesn't look good. I think we're going to see more downside in this, but in the short term, probably some upside. I guess that gap has been filled now as well. Okay. And again, staples is where you see a lot of your value stocks, right? That's where a lot of money went there for safety. Turn those value stocks into maybe not so much value anymore. And so that's why we're seeing rotation out of that. And a lot of that money is going into tech. Now here's utilities. Utilities is, as been underperforming, going sideways, broke out the bottom of the channel here. However, put in this really nice looking hammer candle on Friday and right off of that trend line too. So interesting to see where this goes next, right? Does it go back into here and get through this base? And have you noticed how many bases we've seen, break out the bottom of the base or fail to break out the top of the base, basically? Break out the bottom, but only break out the bottom for a couple of days before moving back up and into the base. We've been seeing a lot of that lately. And that to me is bullish action. That is showing that buyers are stepping up. Buyers are seeing a deal. It's like, oh, look at that. We broke out the bottom of that base. This is a great place to buy this. And they buy it strongly. So that's pretty bullish in my opinion. All right, let's take a look at some of our plays from last week. Speaking of breaking out the bottom of the base, so this is BSX. In this one, I'm not terribly thrilled about this one anymore because, we had this move out the bottom of the base and an instant reversal there. And I thought that was really bullish. And obviously other people thought that was bullish on the following day, right? But what has it done since then? It gets to the top of the base and nothing. Pulls back from the top of the base and moves all the way out of the base. Now, it's bullish that it's reversed. It's bullish that, it kind of hit this 50-day moving average and reversed there. But, I don't know. I'll probably keep an eye on this, but it's going to be really hard for me to trust any move out the top of this. That's the problem. How do you trust this thing now? Because it's just kind of getting messy. And this might be setting up a base to move lower. I mean, we might be seeing a base under base kind of thing going on here. Entirely possible we could see something like that and then really break out to the downside. That's a move I'd probably actually be more interested in playing rather than a move to the upside. So wait and see on that one. COTY is another one that we were looking at last week, pointed out in last week's video. It's still basing, still looking good. Still, I think, worthy of a play to the upside. HIMS. Now, if you watched the weekend update last week, I talked about HIMS. I also made a short little video about it as well and posted that separately. In both videos, so I talked about moving up into, I said, either the 8 or 850 level and rolling over, coming back and retesting the breakout, and then moving back up. Now, I'm not thrilled about how strong this move down on Friday was, especially considering how strongly the market was moving up. This is, moving completely opposite to the market, and doing it. And look at the volume on Friday, right? A little bit of increased volume on Friday, from Thursday's volume. So that's not ideal, and that suggests to me that we need to come down a little farther. Maybe we come down into the $7 level right here. I have a support line, here where about 680, and we've got this move, 21-day moving average down in here. It seems to me it's got to come down into this area before moving up. But, so that, maybe we spend a couple of days there and then move up and out of there. This is the sort of price action I'm expecting. And I would buy on a move something, like there. I want to see this start to turn up before I buy into this. But the play is still intact, in my opinion. We are getting the price, or we're more or less getting the price action that we wanted to see. We wanted to see it test the breakout level, and it's certainly done that. It's just weaker on doing that than I would have liked to see. So definitely keep an eye on this thing. Because in the long term, if you remember from last week, long term, I think we're setting up for a big move up. An easy, probably double from here. All right. ZTS is another one that we were watching from last week's video, and you can see that we broke out a little bit on Friday, but it's kind of an indecisive breakout. Lots of volume on that breakout, though. And you would think, with really good volume like this, we would have got a better move. Yeah, not sure what to make of this. If you're in this, I would suggest, and this is not investment advice, this is just how I would play this. If you did play that breakout, you would have done it with a stop below this big green candle here, right? So your stop would have been 158.50-ish. I think you need to move that stop up fairly tight now. Whether that's below the low of the candle or just below the 200-day moving average there, somewhere in that 161 to 162 area is probably where your stop should go now. All right, so that's last week's setups. So here is new setups. Birchcliff Energy on the Toronto Stock Exchange. So this is an interesting little energy stock out of Canada. You can see that it's been building a great big base or consolidation. You can kind of draw in a bit of a triangular consolidation there. You can just draw a giant rectangle around this, okay? So you can see a lot of basing action here. In the more intermediate or short term, you can see this, some movement down, right? Especially over the shorter term, looks a little bit like oil looks. One of the things that I really like the fundamentals on this company. The guys on Stock, now I looked at this about a month or two ago because I noticed on Stock Unlock that their rating on it was really high, really, really high. It's like a 4.5 out of 5 is their insights rating. So it's got excellent fundamentals, fantastic fundamentals. And one of the things that this company has been doing lately over the last year is paying off debt like crazy. Their debt just over a year ago, towards the end of the third quarter in 2021, their debt was $800 million. Their debt right now is $200 million. They have paid down a huge chunk of this debt. Another thing that they're doing, they've just announced, is they are increasing their dividend tenfold. This dividend, this quarterly dividend, is going from 2 cents to 20 cents. Okay, remember, this is a $9 stock. So that dividend is now going up to about 8.5%, 9%. That's huge. I mean, I want to own this just for the dividend. But I also like, and just looking at the fundamentals and the way that the management, free cash flow went up like crazy in this company. They've had a lot of cash coming in, and management was using that cash to pay down debt. And now that debt has been paid down, now they're increasing the dividend and paying shareholders back. I love this. They've really taken advantage of what oil prices have done, and they're doing the right things, in my opinion. So that's a sign of really good management. As long as these guys can keep this up, I think I want to own this company. So I'm seriously thinking about buying this long term. In the short term, I want to buy this breakout, and this breakout to me is a great place, in my opinion, to start an investment in this. Now, this is not investment advice. You've got to make your own decisions, right? And I want you guys to look into the fundamentals of this company, and I want us to be talking about this in the Discord. I want to see what you guys think of the fundamentals of this one. Anyway, you know what I'm going to do with this. I'm going to be buying the breakout here. And as for the trade portion of this, probably a stop below. You can see some lows in here, right? I should probably just lower this level down just a bit. There we go. Somewhere around there. Yeah, that line is about where my stop is going to be on the trade portion. On the investment portion of this, we'll see. I'm not totally sure yet. Definitely probably below here. With my investments, I like to be making money on them right away. I just can't get the trader out of me, but we'll see. I definitely want to own this in one of my tax deferred accounts. And really take advantage of that sweet dividend that this thing is going to be paying out. This has earnings coming up on first week of February 8th, so watch out for that. I can't foresee any issue with earnings, especially the way that management seems to be running this really well. I'm not sure what is holding the stock back, to be honest. I'm not sure why price is being held back here, with all this good fundamental news in the company. And maybe it's not going to be held back for much longer, and maybe we'll see a strong move higher out of this. So there you go. That is Birchcliff Energy on the Toronto Stock Exchange. Next up is Las Vegas Sands. Now remember, this has earnings next week. Okay, so I think it was Wednesday of next week. But look how tight this consolidation is here. This is sweet. I really like this consolidation. Now, you might be, with earnings coming and everything, you might be tempted to go and put a strangle or a straddle on this. And that's not a good strategy when you've got earnings coming. If this didn't have earnings, I would totally suggest, a strangle can be a good way to play this. But because this has earnings, implied volatility is going to be really high. As soon as this reports earnings, all that implied volatility is going to come out of the stock price, out of the options pricing, and you can be right if and if this doesn't make a big move, you're probably going to lose on that trade. So I would suggest you just lay off of this one for now. Maybe play it after earnings. But we have another one we can look at, and that is Wynn Resorts. Very similar stock, doing exactly the same thing. Also has earnings coming up, though, unfortunately. So it's really unfortunate. You know, these are beautiful setups. These are perfect, right? Consolidating really tight, right under resistance, but so hard to play, unfortunately. Worth watching for the earnings, though, because I think that whichever way they go on earnings, they probably continue that way for a little bit. And, you know, looking at this, it suggests a move to the upside, but because they've run up so much, maybe they've run up too much and they can't live up to earnings. So you get a move to the downside. This is a puzzle you guys got to figure out on your own. You know, I just like the look of that setup. Okay, let's move on to pins. So Pinterest, you got to know that I like this, right? Giant base here. Every time it tries to break out of that base, it's pulled back, and it's pulled back hard. Except this last time, we got up through there, out of it, and have been holding. Now, I don't like Friday's candle, but I do like this consolidation. Base on base. And, you know, right at resistance too. We'll back up here so you can see the big picture on this. If we get a move up out of here, it's going to be huge. Earnings are, again, too close on this February 2nd. Yeah, it'd be February 2nd on this. So we've got, we've basically got a week. If it breaks out tomorrow, you know, it might be worth a play there because I think it can move fast. I think we can get an explosive move out of here. Maybe not because of earnings, though. It's hard to say how the market is going to react to a move either up or, you know, up out of the top of this or back down, you know, out of the bottom of this. Yeah, it might be worth a try because it's got a week. That is a little bit of time to make a little bit of money, but I wouldn't want to hold this over earnings. And we might be early enough to, you know, kind of maybe... I'm not going to suggest a strangle on that. Last one is MRVL. This is a semiconductor company. It's been in a massive downtrend, like a lot of those companies. But looks like it's trying to put in a bottom here. The momentum on the downside does seem to be slowing. Now you can see on the last time up to the downtrend line, also the 100-day moving average, pulled back pretty hard. But what I like about this is this candle, this hammer candle on Friday. This is good price action, and it's doing it with good volume. Take a look at this. Okay, so we have this move up. Good green volume. Look at this volume. Lots of volume here on the move up, right? We get a couple of nasty down days, but it's on relatively light volume compared to this up volume. And then we get a reversal candle right on the 21-day moving average and the 9-day moving average. We get a reversal candle on Friday. Nice looking hammer with good volume. Bottom fishers have got to love this. If you are a bottom fisher, this is the sort of stuff that you should look for. Instead of trying to catch the falling knife, wait until you see these reversal candles. Look at, we had one here, right? Big volume, nice looking hammer. That's the sort of pattern you want to buy. You can even wait. Look at how this went up for a day. It pulled back for a day. You got a retest of that, you know, the top of that hammer candle, and then it went. You know, print this out. Put this in your playbook. This is the sort of bottoming action that if you like catching falling knives, or you know, you're a bottom fisher, and there's nothing wrong with that. It's not really my style, but you know, if you're going to do it, this is the way. This is the way to do it. This is textbook. This pattern, these patterns here, and it looks like it's kind of doing it again, giving you another shot and an entry into this. Yeah, you could see good things out of MRVL, and it doesn't have, it's one of the few that doesn't have earnings coming up very soon, right? You've got a good, just over a month in this. So yeah, you can definitely make some play here. That is it for stocks that we want to look at. Let's go back over to our calendar for the Discord. So these are the sessions we've got coming up. On Wednesday, we have a ticker talk. Our ticker talks are always fun sessions. So if you're in the Discord, shoot me. If you know, show up and come live. But if you can't make it, you can DM me some tickers you'd like to see. Ideally, do DM me on DM or put them into one of the channels. Do that on Wednesday though, so it's fresh in my mind and I make notes on it and everything. So that's Wednesday, and of course next Sunday we'll have another weekend video. All right. So yeah, of course, these sessions members get to attend live. We always have lots of fun. So check out the link below and come join us. Okay, what's next? Oh yeah, thanks for watching, everybody. Don't forget to like, share, and subscribe. And if you've made it this far, you guys are the real stars.